On the last trading session of Friday, gold spot printed a closing price little above $1,855 per ounce. The number is rounded and the market is closed. And on the last week, gold traded as low as $1,802 per ounce and as high as $1,875 per ounce. Numbers are rounded and the market is closed. Gold is trading in a bull trend, and we are below the 50 days, 100 days daily simple moving averages, above the 20 days and the 200 days daily simple moving average. The RSI is moderate on the daily and weekly and the monthly chart, basically moderate on all the charts, and the supports are seen at 1820 if broken, 1800, then 1764, and resistance levels are seen at 1878, then 1900, then 1950. That's all. We'll move on now to the economic calendar. On the economic calendar for the coming week and from the United States, we are waiting for the following economic headers to be released: the CB Consumer Confidence on Tuesday, and on Wednesday, Fed interest rate decision and FOMC statement, and on Thursday, the GDP numbers. That's all for the economic statement. We'll move on now to the trading strategy. Hi again. In the last week, gold market started the week with somehow a sizable sell-off. Then throughout the week, gold attempted to rally, and it actually successfully rallied toward $1,875 and closed about $1,855, as we said in the beginning of the video. Gold market is still in this consolidation phase, and so far I don't see any catalyst for gold or silver or any of the precious metals to rally. Moreover, if gold is going to stay in this prolonged consolidation, it's going to harm gold and silver and the rest of the precious metals, because maybe the fundamentals during this period of time is going to change, and this will eventually force money out from the gold and silver ETFs. However, this is what we see based on the last week trading. For the coming week, the markets will be watching for the Fed interest rate decision, the FOMC statement, and the GDP numbers. Those are going to decide the direction for gold, silver, and the rest of the financial markets for the coming week. However, the technicalities of gold are a little bit worrying, especially on the monthly chart, because it's somehow mirroring what have happened in the year 2011 after gold topped. Gold started gradually to break down, then suddenly it did a massive and sizable move to the downside. We are afraid that gold is about to do similar of what have happened in the year 2011. We know that fundamentals are hugely different at the moment, because there have happened so much money printing and quantitative easing in comparison to what have happened in the year 2011, but the technicalities are extremely pointing to a sizable move to the downside. We don't want to go ahead of ourselves. This week we are going to have a better understanding after the data from the Fed comes out. Also, gold needs to trade as fast as possible above 1900, then 1950, and to score a weekly close above these levels to negate this bearish signals. This is for this week. Thank you guys for watching. Please share, like, and subscribe. I'll see you next week in another video.